In today's video, I'm going to go over dollar cost averaging using stocks. And so what dollar cost averaging is a strategy where rather than investing a huge lump sum in a single stock, you spread that investment out over several periods. So in this case, buying a little bit of the stock every month. That way, if it goes down in value, then you're averaging down along the way, getting into a lower position, which could potentially help you, take advantage of when it eventually recovers. And if it's rising in value, well, then you're profiting along the way anyway. So it potentially offers you a strategy that can give you the best of both worlds, and that you're not, going all in all at once, and that, if the worst case the stock doesn't do well, you're at least averaging down, and then, setting yourself up for some profits down the road. So I'm going to show you how that works and how to create a chart like this that helps demonstrate that. The blue bar showing the stock price at the start of each month, and then the running average showing you the impact of dollar cost averaging and how you're able to get your average down by making these monthly investments as opposed to a big lump sum. So I'm going to delete this image and I'm going to start from scratch. So the stock I'm going to use is Netflix, NFLX, and the monthly investment, as you saw from that chart, is going to be $1,000 every month. So my assumption is that you make an investment of $1,000 at the start of the month, at the end of the whatever it is that you prefer, and just continue on with that strategy. So I'm going to leave a little room for the chart here, and I'm going to enter in some fields for the date and the stock price. So in my example here, what I'm doing is just pulling the stock price as of the start of the first trading day of every month. So I've already downloaded that information. So for Netflix, I just got to convert these into date formats. And so what we could do, if you want to change the date format, I'm just going to show you quickly. If I hit Control-1, you can go to Custom and set this up how you like. So if I want the first 3 letters of the month showing up, it's going to be MMM. And you can see by the sample here what that's going to look like. Put a space, a D for the day number, then comma, space, YYY, until I got the format that I want. Right? Because sometimes using these predefined formats isn't going to get you exactly what you want. So oftentimes I'll go to the custom number format just to apply that formatting so it's specific to how I want it. So anyways, I've downloaded these stock prices already. I've looked them up on Yahoo Finance to see what Netflix's closing price was on each one of these days, because the idea is you kind of want to be indiscriminate in that at the start of the month, whatever the stock price is, that's what you're buying it. You're not going to, waver and say, okay, well, maybe it's a bit too high, or maybe, you want to wait for it to go a bit lower before you buy it. By, just sticking to a strategy of dollar cost averaging, you just get into that cycle and say, okay, look, let's just spend $1,000 on the stock regardless of where it is, and, just buy it the first trading day of every month. So my investment is always going to be this $1,000, regardless of the situation. And so that's why it can be a bit of a no-brainer strategy, in that you're always going to invest $1,000. It doesn't matter the circumstances. That's your plan. If your plan was to invest a total of $12,000 over the course of the year in Netflix, rather than doing that in one shot and buying investing all $12,000 at the start of the year, you spread that out. And as you can see, because Netflix's price has been falling, in a bear market, this is a much safer strategy than as if you were to pile all $12,000 at the start of the year at a price of nearly $600. You'd be looking at a massive loss. Right, obviously hindsight is 2020, but as you see, it's a strategy where you can sort of maintain and keep your risk down in that sense. As long as you're invested in a good business that's likely to recover, it's a sound strategy, right? So I'm going to look at the number of shares you would have been able to purchase. So you take that $1,000, divide it by the share price So it could have bought about 1.67 shares, because obviously the share price is fairly high at that time, and so you wouldn't have been able to even buy 2 full shares. If I copy this down, you can see progressively you can buy more shares now that the stock has been falling. Now we also want to track our cumulative investment, and our cumulative number of shares. And what I'm going to do is I'm going to wrap this text just to make it a bit easier to see this. Shrink that down and center it. Okay, so we've got our cumulative investment, and to calculate the cumulative value, all I need to do is use the sum function. Select the same value as the starting value, except I'm just going to freeze that first value, and so that way when I copy it down, it automatically gives me that cumulative value. And I'm going to do the same thing for the share price, except this time around I'm just going to use column D for the shares. I'm just going to format this a bit differently, but now I've got my cumulative investment and my cumulative number of shares. And now with this I can calculate my running average. And in this case, all I'm doing is taking that cumulative investment, dividing it by the cumulative number of shares. And so you can see initially out of the gate, it's going to be the exact same as my starting price, because obviously I haven't averaged down yet. So there's no impact of that yet, not until I go into future periods. And now it's in the format. So now you can see now my running average went from 597 all the way down to 269 because I took advantage of the fact that the stock price was falling. So now what I can do is create the chart to demonstrate this. So I'm going to select Insert, open up the charts, and I'm going to use a combination. So for the stock price, I'm going to use a chart, which is how it is. The running average is going to be aligned, but I actually got to uncheck some of these series. So I just want the stock price and the running average because I don't need all these extra helper columns. So I've got that, and so now I've got that chart similar to how I had it set it up at the start of this video. So change the gap width to make it a bit smaller, get rid of my chart title, which I don't really need, and perhaps get rid of that border. Stretch this out a little bit, and so there we go. So a similar sort of chart is what I showed you at the beginning, and it makes it easy to visualize and see exactly what's happening, so that we can see the stock price has been falling, and then as it's been falling, because we've kept buying, that running average, that green line, has been declining as well. It's sort of stabilized here of late just because there haven't been significant drops in value. In fact, it's actually increased in December. But as you can see, it's a much safer approach than potentially investing all at once, especially if the stock looks to be a bit overpriced and in danger of falling. Obviously, it's hard to predict a big decline or a big crash, but generally speaking, if you know how much you want to invest, you can scatter that out over the course of several periods. So that way it's a lot easier to just invest the same amount every month as opposed to making a big purchase, because sometimes the stock may seem cheap and then the next month it falls even lower, and there's no guarantee where it'll actually bottom out at. So it may seem like a deal today, but a month from now may actually decline further. So that's where averaging down and using a dollar cost averaging approach can be a bit safer if you know how much you plan to invest in. So that's how you can create this chart in Excel, and how you can potentially create a plan for yourself as far as how you want to structure your investing strategy and how much you want to invest. You can do what if scenarios to see what if the price goes down to this and that sort of thing, to see what your average might look like. So hope you found this video useful, and thank you for watching.